Howdy there, folks, and welcome into today's video. Hope everybody's doing great as always out there. In this video, we're going to get into 5 different ways I could lose a fortune in Tattooed Chef stock. So Tattooed Chef stock, between my public account and between my main private account, I have around 75,000 shares roughly. So it's a very important position for me in 2022 and moving forward in future years. And so I want to talk about 5 big risks with the stock on how I could lose hundreds of thousands of dollars with this stock. A lot of times we talk about the bullish thesis on the stock, and I go into all those details, and that's great, right? But I know some folks have wanted me to speak about what are the risks for Tattooed Chef. Like, how could I end up in a situation where I'm down $300,000, $400,000, $500,000 in this stock, right? And the stock tanks and something like that happens, right? And so I think it's actually important to discuss something like this, because you start to figure out, like, what are the fears, right? Like, where's the anxieties with holding a stock like this, and what are the risks to it? And with every single stock you ever invest in the market, right, or any investment in general, there always comes risk, right? And so you got to kind of look at it from a perspective of, what are these risks? What are the risks that could really take this one down? And how realistic are those? So then you can kind of figure out, okay, this is a very unlikely thing to happen. It's a risk, but it's very unlikely. It's maybe a 2% probability, and this one's a 1% probability, right? And you can start kind of figuring out from there. So yeah, I hope you guys enjoy this video. Even if you don't own Tattooed Chef stock, TTCF, I hope this is a video that you kind of learn from kind of my perspective on a subject like this, and how I think about a big investment like this, or any investment I ever invest in, because it's always about the risk and the reward, right? And a lot of times we get very caught up into the reward potential, so let's talk about the risk. So yeah, hope you guys enjoy this. As always, don't forget to hit that subscribe button. If you have not subscribed to this channel yet, definitely do so. We're on the road to 100,000 subscribers on this channel, which is when small caps start to skyrocket, the rumor is. I don't know. We'll see, guys. So yeah, make sure you hit that subscribe button and a notification bell if you want to be notified every time I drop a video on this channel, okay? So I basically just put in my phone here, a little weekend video here, on 5 things that I think are risks where I could go down hundreds of thousands of dollars on this stock, okay? The first one is if small caps were to fall a ton more. So if you look at small cap 600, S&P small cap 600, where we've been trading, there's only 2 time periods in the past decade when we've been trading this cheap. One was in for a very short amount of time in December of 2018, and we're right around where the lows were then. And the only other time we were below this was actually in 2011, somewhere around 2011, 2012. Okay, and so I think this risk is not super realistic. It is absolutely a risk out there, but the thing you got to understand is, okay, if small caps, S&P 600 small caps, let's say, for instance, I think that's just a good one to look at, right? That's one Yardeni Research covers, and they always show the charts and things like that, and you can track it over the past, several decades. But in the past decade, we've only been lower than this really one time for any sustained time, right? So it's possible that we could go back down to that level or a lower level, right? But you got to understand, this has only happened one other time in the past decade. So when you look at it from that perspective, it's a very unlikely scenario. It is a scenario that is possible, but it's very unlikely, especially with how much cheap money's out there right now, especially with, how much more money supply is out there, especially with how many folks are looking for places to put money. And like I said, when you've only had one other time period where we had a sustained lower number than where we're at right now for forward Ps for S&P 600 small caps, that's just something I think it's important to look at and say it's not super realistic that we would go back down on those levels. And especially when you consider inflation likely slowing throughout 2022, and that was seen as a big fear for a lot of small cap stocks, and that starts to subside, and then they start going from headwinds on a lot of these businesses, right, to actually tailwinds where profitability is pushed forward rather than taken away from these companies, right? And so think about it like this, right? Small caps have, for the past pretty much year or so, right, especially as inflation's ramped up, their earnings have been hit. So meaning, essentially, if you're a company that's losing money, you're likely even losing more money because of the inflation cost pressures. If you're a company that makes money, you're probably making less money than you could have because of these inflation cost pressures, right? And so there's a possibility, not super likely, but it is a possibility, okay, that small caps could fall more, and that pulls down a Tattooed Chef. The second of these 5 things that's a possibility, right, is massive slowing growth. So I wrote down here, like, let's say there's a quarter where they're supposed to, Tattooed Chef's supposed to grow revenues 38%, let's say, for instance, and the company comes in with 16%, right, growth, or 19% growth, or even 21% growth, like some insane number that is so far off of where analysts is. That's absolutely something that would hit the stock in a major way, because a lot of folks would look at that and they'd be like, what the heck, man, is Tattooed Chef still the growth engine? They were supposed to do 38% this quarter, and they only did 16%. People would start looking at that, and a lot of folks would obviously make judgments that whatever's going on at that particular time would continue on, and they start saying, well, they're going to miss numbers next quarter, and they're going to miss numbers next quarter, and now this is only a 16% growth story, right, rather than a 38%. So that would obviously be something that flushes even a lot of longs out in the stock, right, because a lot of us longs are invested in Tattooed Chef for the long-term growth story here, and how much we think, the growth rates are going to be in future years, and that they're going to keep putting up, anywhere from 25% on the low end over the next few years to 40% type growth numbers on the high end over the next several years, quarter after quarter after quarter. So if all of a sudden you come in with a super low number, everybody's going to be looking at that and like, what? Like, are we done here? Is there no more growth in this? What's going on here? So that's definitely a way that the stock could get flushed down in a major way if they miss numbers in a massive, massive way. Okay. The third thing of these 5 is a factory burns down. So one of their, basically, where they produce the food, if one of those burned down or something like that, that would be a problem for the company, right? A big problem. Now, that's not super realistic, right? It's not like they're putting together something that is flammable or something like that. So for a factory to catch fire or something like that, not super realistic. It's always a possibility. The other good thing for Tattooed Chef now is they have several different production facilities now. So if a situation like that happened, which would be dramatically bad in a freak scenario, they could shift production to some of their other production facilities now that they have. They could get those lines out. Now, that does take time. That's the issue, right? That takes time. And so that would be something that, the company all of a sudden has to miss not only their quarterly numbers, but their entire yearly numbers, because essentially, the entire supply chain's messed up, and, all of a sudden for several months, they're not there, right? And then you could have a situation where maybe retailers pull product for a certain amount of time because Tattooed Chef can't fill it. And so then Tattooed Chef has to win back that space and get those relationships back, right? So that makes for a tough scenario. Not super realistic, obviously, a factory burning down, but it is absolutely something you have to consider, and it is one of those freak things, kind of like a once-in-a-100-year health event, right? It could happen, and you have to be prepared for that, mentally prepared for that, okay? But not super realistic, so that's the only good news about that, right? The fourth of these 5 things is they don't launch into any new product categories in 22. So the company's talked about essentially launching new product categories in 2022. Snack items, potentially nutritional bars, meal replacement bars. They've even talked about like handheld burritos, even some refrigerated products, things like that, okay? Let's say we're in the entire year of 2022 and they don't launch anything. There's no new nothing, right? And it's just like they're just doing frozen food items. That would be super disappointing to a lot of us longs, and a lot of folks would look at this and they're like, wait a minute, you guys said you were going to launch into some new product categories and we haven't seen anything the entire year. So if it's this time next year and they haven't launched any new products, that would be an issue. I don't think this one's super realistic. If we look at the innovation at this company and we looked how fast they're getting into all these retailers, they beat all their estimates on far as getting into retailers and announcing partnerships and whatnot, right? If we look at all that, I don't think this company has nothing but a track record of, if anything, super innovating, getting new products into stores like ASAP. And so if I look at it from that perspective, I think it's not a super realistic scenario that all of a sudden we're at this time next year and we're like, wait a minute, you guys didn't launch any new products or something like that. I don't think that's very realistic, but absolutely that's a risk out there. And if everybody looked at it and they're like, you guys didn't launch anything new, a lot of folks would be looking at the stock and like, I don't know if we believe in the management team. When you're a growth company, right? A super growth company like a Tattooed Chef is, TTCF, you have to continue to innovate, come out with new products and things like that. So you keep everybody excited. You have all these new revenue opportunities and you get out of this kind of this one-trick pony, narrative that has been around TTCF stock, where it's like, it's only a frozen food company, which a lot of folks have said, and it's true, right? They've only sold frozen food products so far. And so as of right now, it's only only a frozen food company. As soon as it becomes more than a frozen food company, then you can't just box it into something, right? All of a sudden it's like, well, it's a frozen food company, plus they also sell refrigerated goods. They sell that, and then they also have snack products, right? They have this product. They have meal replacement bars. They have nutritional bars. They start having all these different things, and then all of a sudden you're not a one-trick pony anymore. But it's a risk, and we have to accept that as a risk that's out there, right? No different than, I don't know, if Apple just went a year without producing a new iPhone or something like that. That would be a risk to Apple stock. Not super realistic, but it is always a possibility, right? Fifth of these 5 things is if Tattooed Chef lost Target as a customer. Target's a key customer for Tattooed Chef now. From what I understand, they don't break out, at least I've never seen it unless I missed it somewhere. They don't break out how much revenue is coming from Target. But I would guess that it's a pretty big percentage of their revenue starting to come from Target, and probably will in 22. If we look at what's happened with Tattooed Chef over the last year, they went from like 2 items they had in Tattooed Chef stores back in the wintertime of 2020, like if we go back to last year, right? Now the company has, in a lot of these Target stores, between 10 and like 25 SKUs, depending upon the Target store. So there's another one of those that not a very realistic risk, to be completely honest. I mean, Target has said that was one of one of the best, if not the best, frozen food launch in Target's history, which what they had last year, right? So not super realistic for Tattooed Chef to be in a scenario where Target was to say, hey, we don't want your guys' products anymore, especially when the company just keeps getting more and more Tattooed Chef products. If anything, there's a much higher probability that Tattooed Chef will have 30 products or 40 products or 50 products in a Target store at this time next year, right? Than if they had none. But at the end of the day, it's a big risk. And if they lost Target, that would be extremely detrimental, obviously, to the company, and would be something that cause the stock price to go down in a massive way. These are extremely important things to always keep in mind whenever you're looking into any stock. You got to think about what are the massive risks for the stock that would cause the stock to go down in a huge way, especially when you've already built the position. Like Tattooed Chef's a built position for me now. I'm okay if I acquire more shares. Like if the stock goes down more, I'm fine if I acquire more shares, but it's a built position for me, meaning essentially if I don't buy any more shares, like I'm good with that, right? I'm good either way. Like I can buy more shares if it goes down. If it goes up, like I'm good. I own so many shares in the stock now, like I feel like it's a built position. And when you've got a built position, it's very important you think about these things that could go wrong and how realistic are they or how unrealistic are they, okay? And all these things we just went through are all very small percentages. Any of those happen, but you got to consider it, guys. So yeah, hope you enjoyed this video. As always, much love as always. If you're looking to scale your portfolio to 6 figures, 7 figures, and beyond, check out pinned comment down there. Much love as always, and have a great day.